Good afternoon, everyone. I'm Colleen Ryan. I'm the Consulting Executive Director for the New York State CDFI Coalition. And for over a decade, this nonprofit association has been the organizer and the catalyst for important initiatives that help CDFIs and the communities they serve. The 2020 CDFI of webinars and panel discussions was supposed to be our 11th annual statewide conference with the theme, New York State CDFIs Collaborating for Impact. But even though we can't gather in person, it's a great pleasure to welcome you to this online gathering. Allow me to take a moment to thank the Board of Directors of the New York State CDFI Coalition, especially those on the event committee, for their enthusiastic support as we pivoted from a 2-day in-person conference to a series of online events. I'm grateful for their help. I'd also like to thank our sponsors for their understanding as we made the move from traditional to virtual conference. We're grateful to JPMorgan Chase, Wells Fargo, M&T Bank, Amalgamated Bank, Capital One, B&B, Citizens Bank, Community Preservation Corporation, Hanover Bank, Ponce Bank, TD Bank, Valley, and Wood Forest National Bank for their support. So today, and on several Fridays to come, we'll gather online with supporters from around the state to share ideas, learn about the latest lending and program innovations, and enjoy the company of people with a shared passion. We're testing out a couple of options for the Q&A at the end of today's presentation. You can either use the chat filter that's built, or the chat feature that's built into Zoom, or if it's easier for you, just send your question to info@nyscdfi.org and I'll read it. Please feel free to send questions throughout the talk. I'll do my best to get to as many as I can. If you're not already a member, please consider joining your colleagues from around the state and help the coalition develop its agenda for 2021. With a track record of some 4 decades of providing capital to low-income communities, we have a legacy of success to draw on. And as the necessity of our services becomes more evident than ever, we're looking forward to working with you to keep up with the expectations of our clients and the needs of the underserved. We are so delighted to welcome Marla Blow of the Mastercard Center for Inclusive Growth to help us kick off our CDFI Fridays series. It's my pleasure to ask New York State CDFI Coalition Board Member Melanie Stern of Springbank to introduce her. Thank you.
Good morning, everybody. It's so nice to see everybody in my mind's eye, virtually. Thank you all for participating, for signing up for our conference, and for helping us sort of pivot to virtual. So it's my great pleasure to introduce Marla Blow. Marla was going to be and now is our keynote speaker, and she has, as some of you know, or many of you know, an incredibly interesting resume. So I have taken what I think are just a few of the highlights, so you can take my word for it that there's much more. So Marla Blow is the Senior Vice President, North America Social Impact for the Mastercard Center for Inclusive Growth. She was previously a partner with Fenway Summer and a CEO of FS Card Inc., a credit card venture designed to move small dollar loan customers into a more affordable product. Marla joined FS from the CFPB, and I know some of you know her from there, where she was Assistant Director for Card and Payment Markets, responsible for policy related to credit card, prepaid, and payment industries. Prior to that, Marla spent 7 years at Capital One, and before that at Cameron Capital Management. And you will see she looks way too young to have done all the things on this resume. Marla formerly sat on the board of the Washington Area Community Investment Fund, and she currently volunteers for Stanford University Alumni Outreach. Marla holds an MBA from Stanford University's Graduate School of Business and a BS in Economics from the Wharton School at the University of Pennsylvania. She's a 2015 Henry Crown Fellow of the Aspen Institute and a member of the Aspen Global Leadership Network. So hope you will all join me in welcoming Marla Blow.
Thank you so much, Melanie, and thank you, Colleen, and good day, everyone. It's a pleasure to be a part of this and a pleasure to kick off this fantastic event. The setup and the structure, and importantly, the topic, is one that is very much near and dear and very much top of mind. For me, for our country right now, certainly for the state of New York, for small business, the implications and the importance of the CDFI community has never been higher. So kudos to all of you for doing the great work, for being where you are, for committing to support in the ways that you have, and for the platform you're about to have to be able to provide much needed relief and support as we go forward from here. So let me just take a moment to share with you some of my thoughts on impact, on how we establish impact and growth with equity at the front of the consideration set, and what that looks like from the perspective of the Center for Inclusive Growth. So, and I'll start with saying that here at the center, our view of sustainable and equitable growth is focused on enabling digital economies to work for everyone, everywhere. That is about having the connectivity, the access at a reasonable price point to be able to conduct the business of daily life in ways that enable you to participate in our economy. Our view is that our economy at this point is comprised of networks, right? Networks is a phenomenon that Mastercard understands intimately, right? We are the network. We enable people to meet and transact and execute for purposes of driving their daily needs. And enabling the networks that are digital, meaning the truly broadband access points to our digital economy, the networks that are financial, right? Access to capital, access to banking and financial services, and the access and the networks that are social. And that is about having the relationships, having the support, having the perspective that enables the economy to function. And our role in this is to ensure connectivity to all three of those networks. That is how we have framed our work at the Center for Inclusive Growth. We have now been doing this work of building equity, building inclusive growth, building inclusive economies, enabling shared prosperity for the last decade, right? So I think that's important to keep in mind. This is not new. We didn't start this today. This is work that we have been doing globally, actually, for the last 10 years. Through our work, we have enabled over $250 million to flow to Black-owned small businesses through our CDFI partners over the course of the last 2 years. And in our commitment that we've just made, we made a large commitment last week to provide $500 million of support over the next 5 years for Black communities in response to the moment that we're in. We are employing and partnering with CDFIs as critical enablers of that $500 million commitment. And what we intend to do with that is to enable another $500 million of capital to flow to Black-owned small businesses. So I want to make sure that that isn't confusing. Mastercard is not putting $500 million of its capital into the small business arena. But what we are doing is building the underpinnings, enabling that capital to flow through our CDFI partners, putting our CDFI partners in a position to be able to distribute capital, to be able to do so with the latest technology, to be able to do so with confidence about your own solvency, about your own support, about your own position. And so I'll talk about the work that we're doing there. The key ways in which we are doing this and doing this work is, again, about enabling the access to those networks that power the economy. And we're focused on 7 priority cities as we do that. The 7 cities are New York City, of course, Los Angeles, St. Louis, Atlanta, New Orleans, Dayton, Ohio, and Birmingham, Alabama. And in those 7 places, and that again includes big metropolises, it includes much, much smaller cities, but it is about ensuring that the networks that we believe are the critical enablers are functioning well, and that all communities, Black communities, white communities, women, all citizens have access to, and all of the people have access to those networks in all of those cities. And we will have our CDFI partners play a critical role with us in that. So let me give you a couple of examples of some of the work that we have in mind. And it is informed by our view that CDFIs are absolutely the front line, right? The front line for support of Main Street across this country, everywhere we go. That critical capital, that critical ability to access programs associated with Small Business Administration, the PPP program that just came up, all of the capital that CDFIs have access to through Treasury, all of that tremendous support is the difference maker and is absolutely the difference maker in moments like this critical moment that we are in right now, where we are faced with the twin challenges of a pandemic associated with COVID-19 and the economic shutdown and social distancing that's been necessitated as a result of that. And then also with the very clear opportunity to address some of the inequities in our society, in particular as demonstrated in the response to the death of George Floyd. In immediate response to the pandemic, we look to some of our partners that we've already had long relationships with. And we can talk about Grameen America as one example of this. New York-based CDFI, our work with them took on two dimensions. One, enabling Grameen America to shift the business model to an entirely virtual structure. So Grameen America has a social capital aspect to it where they bring together communities, overwhelmingly communities of women, overwhelmingly actually low-income Latina women, business owners. And those meetings in person were a critical component of the capital, of the credit provisioning, of the ensuring repayment, of supporting business vitality. And enter COVID, and all of a sudden, none of that can be accomplished in an in-person format. So the need to quickly pivot and do that in a digital construct became absolutely paramount. And Grameen faced potentially having to shut down all of that work if they weren't in a position to be able to change immediately. Mastercard and the Center for Inclusive Growth have already had a long relationship with Grameen. We've been working on digitizing some of their other processes, enabling digital disbursement of loan proceeds on Mastercard's products through Mastercard's rails, and also enabling technical assistance and training for their business owners through a grant from the Center for Inclusive Growth. We made an incremental grant, an emergency grant, if you will, as a part of the response to the pandemic that enabled the move online to the entire social capital, social credit construct that Grameen has been applying, and to enable the providing of some payment relief so that the business owners at the end of the chain, we contributed to a pool that enabled those business owners to have a payment holiday. And that was purely a recognition of the fact that their end businesses had the same challenges, needing to figure out how to provide their services digitally where possible and face zero revenue for a period of time where they could not shift to virtual. So if you think about that from the perspective of who that actually is, right? To talk about an actual example. There's a business owner named Sheila. She has a business that's called Lasting Impressions, right? Lasting Impressions is a vintage apparel store in Harlem, and it was her dream to start this vintage apparel store and be able to provide, she's very stylish, much more stylish than I could ever dream of being, and was really proud and had dedicated herself to building this business and had to shut it down, right, in the face of COVID. And Sheila has a phenomenal fashion eye, is a fantastically committed entrepreneur, but at no point had she contemplated trying to sell this vintage apparel online. She didn't have a website that displayed the inventory, didn't have a digital commerce platform that allowed her to execute those transactions online. Hadn't really contemplated being able to support the kinds of data provisioning and reporting that would be needed to qualify for a loan. And we worked through Grameen, she worked through Grameen to be able to access the loans, right, and be able to participate in PPP, and was able to use the funds that she was able to borrow to convert lasting impressions to an online storefront. And so now is able to stay in business, to continue to provide her services, importantly, to broaden out her customer base. And so this is now a Harlem institution still, but has the ability to access customers all over the country and all over the world. And I know I'm preaching to the converted here, but just want to give, bring it to life, right? And you all have those exact same stories, right? You know, these Main Street businesses that are the lifeblood of our local communities and that need a helping hand in moments like this. And that is the work that we have brought to the table and have really committed to doing over the past few years in terms of digitizing and modernizing the infrastructure of the CDFI community. The wonderful thing, and I think the wonderful moment, the wonderful, maybe kind of tiniest of silver linings on the moment that we're in, is that others are keen to join, right? There are people participating and talking about CDFIs in places that I've never heard people talking about CDFIs. I started thinking about the CDFI universe when I was at the CFPB, which, hard to believe, is now almost 10 years ago. But that was where I really first started thinking about it. And it was the domain of the banks, right? And the banks thought about their CRA credit and their support and relationships with CDFIs that were maybe in their footprint. Fast forward to where we are today, and we see announcements from Square, from Google, Netflix, PayPal, Starbucks, Costco, right? The list is incredible. It was moving well beyond the banking sector. And that kind of support and outpouring to support the financial intermediaries that enable small business to stay alive has arrived at, absolutely in the moment where it is sorely needed. Obviously, many of you have probably observed the same thing that I observed, right? Which is that overwhelmingly that support has come in the form of deposits. Deposits are safe. Deposits are great, right? Deposits do enable the provision of incremental capital. But the real, you all know, right? The real bang for buck is in the equity component, right? It is in the loan, the subordinated debt component of it. It's in the reserve and guarantee side, and getting that grant capital in the door. And that's where these relationships with some of these new, I'm going to call them new entrants, large, deep-pocketed, concerned corporates, large corporates that want to make a difference. And I think thinking of those relationships and seeing them show up here, I see as an opportunity to think of this as the beginning of the relationship. And at the beginning, this deposit structure and this deposit commitment is a foot in the door, right? And taking that relationship forward and building upon it and moving it in the direction of, what would really change the game for us would be equity. And here's how that works. And here's what equity would look like from your perspective. Here's the kinds of dollar value that could be created if we can convert some of this commitment and your support into the equity dimension. So I encourage all of you, and probably I'm again telling you what you already know, but grab hands with those players, right? And that's through your associations that you may be a part of, through some of the technology suppliers that you are accustomed to working with, finding ways to really embrace the new market participation and the new focus on this arena, and take advantage of the opportunity to be able to work with new players in this space. Beyond the modernizing that we're doing and beyond seeing the new entrants here, we have also been very vocal and very involved in advocating for CDFIs at the federal level. And so where you may operate at the state level and work with your state legislature, with your state representatives, we have been actively taking advantage of Mastercard's access at the federal level in the House of Representatives, in the Senate here in Washington, D.C., where I am based, to actively make sure that they are keeping an eye on CDFIs and that they think about the needs of CDFIs as we really contend with the challenges that we face in this moment. And so as we have gone about the business of engaging and ensuring that an individual local CDFI talking to their local representative does some work talking about the importance of this system, right, of the system of CDFIs, of the networks of CDFIs. That is the work that again, Mastercard is uniquely positioned to be able to do, right? We are that network, right? We are that network from a consumer transactional perspective, and we have the ability to think about how this operates at massive scale and what that means. And so we've just, if you know, for those of you that might pay very close attention and be very actively engaged in looking at what's happening at the federal level, what you may have noticed is that another bill just passed the House. It's being sent along to the Senate. I think that happened literally yesterday, hot off the press. I've been in DC for 16, almost 17 years now. And I generally try not to let myself get sucked into our lawmaking and what's happening in the legislature. There are people here in DC for whom that is a sport, right? That is their, you know, they sit on the sidelines and watch and understand every intricate movement of it. I haven't gone that far, but I have seen this most recent bill, and I'm excited about it because it feels like it's got a pretty good shot of actually getting through. And it is a bill that would require all of the federal banking agencies to create a $10 billion commitment of equity for the CDFI community. And again, don't have to tell you, right, if you get that $10 billion to come together, that enables multiples of that for the communities that are so critically in need of all of our support in this moment. So we remain ever hopeful that that can actually come together, that we can get to a place where these things are much more cemented in terms of the work that is needed and in terms of the kind of support that is needed for the CDFI community. And what we are really hoping is that the Senate will take this up, that we will find ourselves in a situation where CDFIs are very much on solid ground, right? Where there is far less concern about access to capital, about access to secondary market outlets that would enable incremental lending, about being in a position where you know that the federal support that you need is there. And then that allows you to focus on your local community, to focus on the state of New York and what would be happening at the legislative level there, and focus on the local communities that are so critically dependent on your work. So those are the ways that we have thought about and have taken a lot of heart in the support from the corporate sector directed at CDFIs. When we think about where there is opportunity for the equity component, for the equality of the growth in our communities, we are obviously at this moment thinking deeply about what's happening for Black communities, where the racial wealth gap is profound, right? We are talking about the average Black family in the United States has a net worth of about 17 million versus 17,000, I think it said 17 million, $17,000 versus the average white family, which has a net worth of about $170,000. And that 10x racial wealth gap is a function of the systems and the system choices and the policies that have taken place over the course of US history. And part of our work is really to commit ourselves and playing the part that we can at Mastercard in closing that racial wealth gap. And our efforts there, and I even hesitate to call it wealth, right? I think when people hear wealth, they start thinking about who's getting rich, right? Who is in a position to who is in a position to be able to answer, and be able to address just the need for a basic asset, right? This is just about a home or some other kind of asset that enables collateral building. And you all are very familiar with the process and the systems that are required in order to be able to get a loan, right, and be able to complete a loan application. And that ability to answer that with having access to some assets is the missing component for part of that economic development and that prosperity building for Black communities. Another component of it is opportunity, right, and access to opportunity. And what does that look like? And our work around that has been focused on ensuring that there are avenues for advancement for all jobs, for all people. And our view on that is, if jobs are better across the board, jobs are better for Black people as part of the masses. So we're looking at portable benefits, right? And what does it mean for people to be able to navigate the labor market in ways that are not necessarily causing them to be concerned about whether they will still have access to healthcare, to savings opportunities, right? Those are the kinds of things that keep people in positions that might not necessarily serve them. And we would love for people to be able to be as nimble as our digital labor market is going to require in the future. That is also focused on skills attainment, right? How do people build the skills they need in order to be higher functioning members of the workforce? And so we do look at workforce training opportunities, about workforce development. We look at education and, importantly, alternative routes to education and how we can enable people to grow on those dimensions. Another parallel component of that is I've been, in terms of my interactions and engagement with the CDFI universe, we've heard over and over again how important it is not just to provide the capital, but also to provide the training, the technical assistance, the know-how, the access to information that will allow businesses to use that capital wisely. And so another critical component of our work there is about the ability to ensure people have access to that kind of wraparound support to go along with the capital. And so while Mastercard is not, we are not a bank, right? We do not provide the capital for lending. We don't make the investments. We don't evaluate for that. But we do look ultimately at how you enable the components that make this system function. And that is a place where we have been very actively engaged. So again, through some of the service providers that some of you have probably worked with, through some of the networks of CDFIs, we have provided support for the technical assistance layer of the work and of the commitments that CDFIs provide. And then one other piece I'll highlight in terms of our thinking about what it means to have growing, sustainable, equitable participation in our economy is about access to the basic financial services that are needed to conduct one's life. And we are acutely aware of the fact that the banking system in the traditional sense has played a very large role in contributing to some of the ways that people are excluded from our society, whether that's by virtue of not being able to access credit, whether that's by not having the ability to conduct the daily transactions of life, or conducting them at such a premium price point that it becomes a problem in and of itself. And so we've looked at the fact that in Black communities across the country, there are far fewer banking options. And I believe the latest statistic I saw was that
Let's see if we can give Marla a moment to unfreeze. Just be patient,
When
please.
controlled
There we
for
go.
in Black community, the construct of being unbanked and not having access to traditional banking services. And so we are looking at how people navigate when they are confronted without having access to those kinds of services and that support. And the use of some of the alternative financial services providers, the paying of premium, premium interest rates and getting into less advantageous loan agreements, extra our tools, our partners and our programs and products, we have created what we're calling Mastercard Money Connect solutions. This is a suite of products that enables the trends, that enables people to receive, send and receive money to their family members, to be able to have financial access and payment functionalities all in one place. It also is interestingly allows for members of communities that might lack some of the basics that they need. For example, a form of identification. We have a platform that allows for the identification, the payment functionality, the transaction capability, all to be resident in a single form factor. And that product on our Mastercard City Key platform is a critical component of enabling people to have access to those systems at a much more reasonable price point than might otherwise be viable. So those are some of the examples and some of the commitments that we are making, how we are using Mastercard's tools all across the enterprise, from the work we're doing in the center about making grants, about enabling access, about providing the wraparound services, about modernizing the platforms, and where we look at specific communities, what the needs might be, whether that's around access to capital through the CDFI community that you all represent, about having access to education opportunities, to skills attainment, to enable growth in jobs, to having access to financial tools, right, and financial services at price points that are consistent with the services that are needed. Those are the places where we are actively engaged and where we believe there is the biggest opportunity for change. And so I will stop there and be open, opening up for questions. But I think, the key thing to just know about where we are and what we're committed to is being a catalyst, right? And that Mastercard really thinks of itself as the catalytic agent for change in our systems, in our networks, and in our society, from the perspective that we are a part of the foundation of our financial system. So I know some of you already and look forward to continuing to engage you in the ways that we already have. And I look forward to building new relationships as we go about addressing the massive need and massive opportunity. And I'll leave you with one more statistic. If we address the racial imbalance in the equitable distribution in our society, and we bring Black communities into the mainstream, by closing the racial wealth gap, we will create an extra $1 to $1.5 trillion of GDP activity in this country. So if nothing else, there's a huge business case to be made for addressing some of this inequality and ensuring that the growth that we are all about to go forth and enable is as equitable as we can make it. So thank you very much. Hopefully this gives you a lot to chew on as you go about this conference over the next few hours and the next few days. And I look forward to connecting with all of you. So thank you, Colleen. Thank you, Melanie. Happy to open it up.
Thank you so much, Marla. The first question that I have for you is, way back in the beginning of your presentation, you talked about the 7 cities where MasterCard's going to pilot this program. Is this really just a pilot, or will this close out other cities, or what's the reason for the primary focus on those 7 cities?
Yeah, so you know what, it's definitely a pilot, right? And what we want is to learn. We know that cities are not cookie cutter, and that cities have variety of needs, right? In the city of Los Angeles, there is a major homeless problem in Los Angeles. And the city but is also aware of the fact that if you go out and give cash to homeless people, what you risk is major amounts of crime, right? Associated with, the theory that they all have a bunch of cash and now let's go get it. And so we enabled the distribution of $36 million of donated support for homeless Los Angeles residents that otherwise would have never had access to the financial system. They could now use that digitally to make payments, to identify themselves, to reload some of those platforms and reload capital from other agencies in the city that are supporting this community. But that's a specific need in that community, right? If you think about Birmingham, very different set of questions, right? In Birmingham, questions are, how do we jumpstart the economy in this city? How do we build innovation into this city, right? Comparing and contrasting the needs of something like a Los Angeles versus Birmingham, totally different universe. But what it allows us to learn is about working in a place where there's a need for an economic engine versus working in a place where there is already a hugely dynamic sort of financial underpinning of the city, but there are parts of the community that just can't access, and how do you enable them? And then take what we learn and move from there into very broadly, far-reaching other cities across the United States. So this is absolutely a pilot, and one for us to explore large, medium, and small cities, and then be able to apply what we know in other cities across the country.
That makes sense. Speaking specifically to Los Angeles and their major homeless problem, one of the other questions was, with so many families in New York State finding themselves suddenly thrust into a low or moderate income bracket, how do you think, what do you think is the imperative to address the acute shortage of affordable housing in the state, and how might that have changed?
Absolutely. So affordable housing is a tremendous challenge. And Mastercard, as a network associated with commerce and commercial transactions, we are not directly involved in the housing arena, but recognize the importance of housing as both a source of shelter and safety and a source of financial stability. And whether that's through ownership or stable ability to rent, those are important dimensions of people's lives. And so finding the political will and the economic support to drive creative solutions in the various places where home ownership has become completely out of reach, and in some cases even renting has become really challenging. What can we do, right? Like, what are some of the creative solutions to this? Is it about land trusts and other forms of some of the more creative approaches to business model building in that arena that can be game changing? Is this about ensuring that there is participation in the prosperity of a neighborhood when there is revitalization, right? When those revitalizing forces come together.
Marla's got a wonky feed, but I'm guessing she'll get back to us.
Hey, Colleen, while
we're waiting.
We're waiting.
And so looking at
she's back.
text, and it was dealing with people out of the C Corps.
We can hear you, Marla.
Did I get dropped there?
You did, but you're back. You're okay.
Oh, God,
you were talking about, yeah, I know, it's technology, gremlins.
Sorry.
That's quite all right. We were talking about the different models, business models that we might need to incorporate to help make sure that people are able to be housed securely, safely, and equitably.
Exactly. Yes, that's right. And we're very interested in new models of development around that, and what kinds of partnerships and what kinds of market actors have come up with creative solutions to allow that. So those are things that we have been thinking a lot about and think are extremely important. And what we really want there is to enable the information dissemination, right? So where we can shine a light on creative opportunities, that's what we really want to ensure that there's awareness and that people are able to replicate that where they may be.
Well, I think we do actually have a panel coming up on land trusts, community land trusts, and how they can contribute to affordable housing in communities. So perhaps you'd like to come back and join us for that, sit in as a guest. When you talk specifically about data and using data to help tell some of these stories, I think New York State CDFIs, we all have different reporting requirements. Our funders have different reporting requirements. We are really struggling with the issue of data, and how do we use that data to illustrate the stories that we need to tell. Could you talk a little bit more about how Mastercard synthesizes, collects, synthesizes, and then, pushes that data back out to help illustrate the stories that we need to tell?
Absolutely, yeah. And one of the things we are really proud of is the work that we've done to create the Inclusive Growth Score. The Inclusive Growth Score can be found at inclusivgrowthscore.com. It is a free tool. All you have to do, I think, is put in an email address to create a little login. And you can go in there and look at every census tract in the United States. So it is incredibly granular. And that level of granularity is informed by Mastercard's own data set. So our ability to look at economic transaction activity across the United States at the very, very detailed level puts us in a position to be able to share, right, and make this information available for industry participants, for active interested parties like the CDFIs on this call, like other public sector leaders, economic development agents, to be able to have insight, right? Insight into where there has been robust economic activity and where we may be seeing economic activity that has been paled and has an opportunity for meaningful investment. That we think is a core role that Mastercard can play. And so it is very unusual, and it took a lot of work for us to get Mastercard to share this information. And our ability to contribute to the lexicon in terms of understanding of what's going on at the very detailed level reflects our commitment to ensuring this kind of data access. So I encourage all of you, if you're accustomed to looking at a specific geographic area, thinking about your cities in terms of neighborhoods, et cetera, this data will actually bring a quantitative dimension to that work. And it allows you to be able to identify where there is unrealized potential. And it might be by looking at a census tract that is surrounded by very robust economic activity all around it, but somehow in that one dot in the middle, there might not be as much. And that means there may be something that you can do, right? And you can go and identify who has the pockets, who are the corporate actors, who are the philanthropic actors, right? Who are the commercial actors that want to build businesses there, and facilitate that, right? And introduce that kind of vitality into some of the communities. That's really how we think about our role in this effort.
I have one more question. It's a combined question, but Melanie had raised something while you were a little bit glitchy. So
well, I had
Melanie
my
wants
glitch.
to come back. if there was a glitch in the matrix. If Melanie wants to come back for a minute. If not, oh no, here she comes.
No, actually you answered the question, because we've been talking to the center about a data project around a rezone corridor in the South Bronx, Jerome Avenue, and sort of being able to get a snapshot of economic activity similar to what was done in New Orleans, so that we can then go out and sort of make the case that what kinds of redevelopment projects and what kind of retail is really needed, and of course sort of establish that there really is sort of active, robust activity in the corridor.
Yep. Okay. And I think that falls exactly into the same, as you're rightly saying, right? That falls exactly in the line with what we're talking about. So we would take that corridor and start with looking at where it scores on our inclusive growth score structure in order to be able to identify what is the, what are the opportunities for incremental growth, and then how do we take the information, go out and identify actors. But also the inclusive growth score allows you to look at what components of inclusion are missing, right? And whether that's, Black-owned business or women-led businesses, or access to certain kinds of employment opportunities, right? And then to be able to focus that work on how you can drive change in that specific community.
Questions are now starting to grow, but I'll try to wrap it up. Of course, everyone hears grants and access to funds, and everyone gets very excited. So I've had a series of questions on, will there be an open application process? How can we as New York State CDFIs or / the coalition have a closer relationship with Mastercard? And then finally, what strategy do you suggest for smaller CDFIs who tend to be more nimble than the larger ones to access some of the capital being contributed by Mastercard and other corporations to make social equity changes? So kind of micro to macro, how can we get some of this? How can we help you? Help us.
Absolutely, yes. So people warned me that everybody's going to think I have $500 million now.
Come on, get that checkbook out.
Not the case, right? Like not the case at all. But what we do have is active engagement with this community. And by virtue of the fact that many of you already know me or know my team member, Sandy Fernandez, right? We are not new to this arena and have really long and deep relationships across a variety of dimensions here. So what we intend to do is really focus on how we can enable the support of the entire network, and thinking about working through your associations, right? Like, or the networks of CDFIs, whether that's by geography or by type. That's how we think about attacking this. And that is, how do we distribute to the extent that capital is what's missing, right? How do we enable the distribution of that capital so that there can be flows of capital across the board? Where what's needed is a secondary market, for example, to create some balance sheet relief, right? We work with those secondary market actors to create, we will maybe provide the operating layer and then enable them to build the capital stack that's missing. So we think a lot less, although we do, and I gave some examples, we do work with some specific CDFIs. Our primary work has been about working with organizations like AEO and OFN that are themselves kind of that are the network connectivity points across the CDFI landscape, so that we get maximum bang for buck by creating something that can be leveraged across the board, right? And that becomes available for all the market participants. So I think communicating through those channels and making sure that they know what the needs are, that they are, because they're the ones that are going to be able to communicate back to us most directly. If we go out and try to communicate with all 1,500 CDFIs in the United States, it will never work. And so thinking about some of those organizing principles that are already in place and some of those points of connectivity and intersection, that's really where this can make a big difference. So I would encourage organizing and getting together and developing collective points of view, getting that communicated up through those associations and member networks. And that's where it reaches us. And that's where we are likely to be that catalyst for change and investment that you need.
That sounds like a call to action for the New York State CDFI Coalition.
Absolutely.
Well, I really want to thank you, Marla, so much. Your insights have been so valuable and certainly gives us a lot to think about and to chew on going forward.
Thank you.
I also want to thank everyone else who was on this call for helping us to kick off this CDFI Friday series today. And I hope that you'll be able to join us for one or more of our upcoming events, which include How Community Land Trusts Preserve Affordable Housing on October 16th, Cybersecurity for CDFIs on November 6th, and Creating Community Wealth Through Community-Controlled Investment on November 13th. We'll be adding a few more programs to this list. Just keep your eye on our website or watch your inbox as we send out notices. And In the interim, be safe, be well, and thank you all again for participating. Have a great weekend.
Have a good weekend. Thank you so much.